Hi, I'm Jim Gordon, and you're watching Market 1 Minute. Joining us is Ali Haji of Ion Energy. Okay, tell us about Ion Energy and what are the key opportunities that set the company apart from other emerging explorers?
Ion Energy was founded in 2017 on the back of the last lithium cycle. We founded the company in Mongolia, a jurisdiction that we understand quite well, and obviously its proximity to the largest consumer on the planet, that being China, strategically places us in a better position than the vast majority of the producers in the world today. Having a first mover advantage in country, as well as a team that's had operational success in country, allows us to differentiate ourselves from our peers.
Ali, what has the company been up to over the last 12 months, given the current environment we're in?
It's been a busy 12 months, to say the least. We received conditional approval from the Toronto Stock Exchange in April of last year. We then carried on sort of pressing through the summer, looking at opportunities to go public, and we were encouraged by government spending in the EV sector as well as the renewable sector. On the back of that data and on the back of this government spending, we went public on the Venture Exchange in August last year. Shortly after going public, we added two industry names to our advisory board, strengthening our bench. We then had some coverage from a few different firms, but importantly, we started exploration on Bawaiul, our flagship 81,000 hectare license, 24 kilometers from the Chinese border, in October of last year. Beyond that, roll on December, we started to look at marketing to the US, and so we brought our US listing online in January of this year. We then added an additional license to our portfolio. So we acquired the Urgakhnaren license in the Dornogovi province, which is an extremely infrastructure-rich province of Mongolia. And we also added an additional technical advisor that is a Mongolian national, a PhD lithium hydrogeologist. He serves as our scientist on the ground. Beyond that, we saw some interest in the battery metal space, whereby a number of different firms were raising capital or closing financings. And so we announced in February to embark upon a bought deal. We had initially announced it for $3 million. We had demand for $10 million. We upsized to $5 million and closed with the over-allotment option, taking into the treasury $5.75 million for the company. So this capital will serve to finance the company for the next 2 years, but I'm sure you can tell it's been a busy 12 months.
And what should investors expect to see from Ion in the coming months, and why should they be paying attention now?
Well, I think they should pay attention to the company now because we are in that very early stage as far as de-risking and acquisition, but also exploration. And the next 12 months for the company will entail an extremely aggressive exploration program on not only Bawaiul, but also on Urgakhnaren, which is our secondary license. You can also expect to see the company look to acquire additional assets in country, thereby multiplying our asset portfolio. Once we've had a chance to complete all the exploration work that we have targeted for this year, we expect to have an early resource indication on a number of our assets, which ultimately put us in a position whereby we'd understand better what we have in the ground. At a very early stage, we would have a resource indication based on an average brine sample or an average grade for lithium brine in our assets, but also a better understanding of the chemistry of our specific assets in Mongolia.
Given the recent news in the battery metal space in regards to strategic partnerships, what aspirations does the company have towards that?
It's clear to us that, be it a Tianqi, a Ganfeng, a NIO, or anybody that's operating in the region, as we've seen around the world, this vertical integration of the battery metal sector is quite apparent and proliferating. And thus, we've also seen a need to centralize supply in such a way that it is now looked at as a continental mineral. So the Europeans are doing the work they need to do to source lithium from Europe. The Americans and the US are doing much the same. China today imports the vast majority of their lithium from Australia or the lithium triangle in Latin America. So what better way for them to vertically integrate, but also essentially obtain continental supply by looking at companies like Ion Energy to help them drive their path forward. Now, we wouldn't want to involve any of the strategics at this level with the Ion Energy story. I think what we'd like to do is allow ourselves to de-risk significantly through exploration, get a better understanding of our assets, and then ultimately let Ion Energy come into a strategic partnership or allow a strategic in the region to come in for a toehold later in the year for in the company.
And finally, Ali, if potential investors were to walk away from this interview remembering one thing about Ion Energy, what would that be?
I would say, Ion Energy is still in its infancy, if you will. We've only been trading about 7 months or so. From a valuation perspective, looking at our early results at 811 average grade, as well as the vast land packages that we hold today, Ion Energy is simply undervalued relative to its peers. So I would say to investors that this is a company that should be on your radar as we look to service Asia's growing demand for lithium.
Ali, thank you for joining us.
It's been an absolute pleasure. Thank you.
Hi, I'm Jim Gordon. Thanks for watching this Market 1 Minute on YouTube. If you want to keep up to date with other videos that we're putting out, you can click subscribe just below me or click on this list to see other great videos from Market 1. And thank you again for watching.